Join over 5,000 attendees for the largest AI event in Asia at Super AI Singapore, June 5th and 6th, 2024. Raoul Pal, Benedict Evans, Balaji Srinivasan, Edward Snowden, and over 150 others will join the industry's most influential to explore and unveil the next wave of transformative AI technologies. Singapore will become a vibrant AI hub for a week from June 3rd through June 9th, with over 150 side events that will make for unparalleled networking opportunities. Visit www.realvision.com/superai for 20% off tickets with the code REALVISION or click below.
What's next for the US dollar? Welcome to Real Vision Daily Briefing. It's Tuesday, February 27th, 2024. I'm Ash Bennington. I'm joined today by Dale Pinkert, trading coach at TradeGateHub. Dale, welcome back to the show.
Oh, thanks, Ash. I'm looking forward to having the conversation with you on Turnaround Tuesday.
Well, it's always a pleasure to have you on. Dale, let's harken back to the last time you were on Real Vision Daily Briefing. You were looking for 105 on DXY, dollar index, of course. What do you see happening now?
Okay, well, if you put the dollar index chart up, I think we're trading in the 102 level, and 105 was a technical area a little bit above 61.8, and it was achieved. Unless you really want to be very cryptic about it, the high was 104.98. To me, that's on the button. So anytime you're within 1% of a target. So 105. And we've had a nice break from 105. At one point last week, we were at 103.30. So viewers who took it seriously got out of their dollar longs. Maybe they went short for just a trade, and you had a profitable trade, still do. And if you can't make money after the market going your way for 130 pips in the Dixie, you should turn off your platform, because you have to learn money management and how to take partial profits. So, if you're there, take partial profits, because I really think the day of the week, Ash, is the big red number on Thursday, the PCE, which is going to impact yields and the dollar's last chance to put up some type of rally here.
So, Dale, let's talk about the future directionality here that you see for DXY, maybe some price targets if you'd like to go in on that. Trend's been broadly higher over the last 3 months, call it beginning of the year to date. A little bit of a drift down here in the last couple of days. What do you see? Is there a secular trend here?
Well, I believe the secular trend is bearish, because I mean, you go back to where we were 20 years ago or 5 years ago. We've had intermittent rallies. We had a nice rally up towards 120, but I think we're on the precipice of beginning a bear move that's going to be, I think, fairly substantial. If the Dixie closes under 103.80 after the PCE, to me, that's a sell signal that will be on our way to challenge par. And under par, you could come up with all kinds of targets at 95. Same type of situation.
Wow. Did I hear that right? All kinds of targets around 95?
Yeah,
Wow.
95, 92, 120 euro. So I'm a dollar bear. And I've been bullish a dollar since par. In fact, the last time I was on with you, we were trading around par, and I said, buy the dollar. So I've been waiting for this to complete, this bear market rally, for a while. We had that high at 107, and then we came back down, and I thought we would retrace, which is exactly what we, if viewers see the chart, is what we did. And the retracement at 61.8 was right around 105. We've come off, and now's the moment of truth for the dollar. When I look at the dollar chart compared to the 10-year, the 10-year looks better. We've had yields recover in the 10-year from 420 to over 430, and the Dixie has barely rallied on that. So when I look at the 10-year, maybe we go to halfway back 440, extreme case 460, But back under 420, you're going to see rates drop, and they could drop down to 360 to 330. I think that will also be part of the bear case for the dollar.
All right, we got a lot of things we want to talk about here. Treasury market rates. I want to talk a little bit about the euro. But first, while we're talking about Dixie USD more generally, I wanted to take a listen to something here on Real Vision. All this week at Real Vision, we're hosting a series called How the Pros Do It. And we're talking about research. Today, we had on two all-stars, Brent Donnelly, president of Spectra Markets, and Peter Bookvar, CIO of Bleakley Financial Group, with Maggie Lake. Let's take a look at that clip.
FX kind of is two things. One, it obviously has a direct impact on, say, multinational earnings. It has an impact on oil imports in Japan. Like there's a lot of macro and micro impacts. But then it also can be a barometer of capital flows. So like when the US is the center of innovation, it's the only strong place for growth, then that's reflected in a lot of places, not just Mag 7, but also in the dollar. So I think a lot of times you can, even if you're not an FX person, you can use FX as kind of a barometer of where the money's flowing, because a lot of FX flows are real money. So people are buying an asset or buying stocks in Europe, or they're buying a company in Europe, and then they're buying euros in order to facilitate that transaction. So a lot of times I think FX is a good barometer for capital flows overall, including emerging markets and G10.
All right. First, I should say, if you want research from pros like Brent and Peter, head over to realvision.com/RV marketplace. That's realvision.com/RV marketplace to see what RV member discounts are available for you. By the way, let's talk about this notion that FX is a good barometer for capital flows more broadly, particularly emerging markets in G10. Dale, what say you, sir?
Definitely, it's the deepest market. It's much larger than the bond market, which is much larger than the stock market. So I think it's a fulcrum of the wheel. If you get the dollar right, I think you could get the rest of the different asset classes correct. We've had a market where it's been all one market. In general, it's been dollar up and markets down. And when it's been dollar down, it's been risk on. So we've seen a little bit of differentiation, but pretty much the dollar is, at times a wrecking ball and at times a jet fuel for a rocket ship.
So let's talk about some of the things that we teased before we took a look at that clip, specifically Euro USD trading right now on my screen, a dollar 8 or thereabouts, 1.0845. What's your take on this? What's the call?
Okay, well, the call was 107. I think we went 106.85. So, you know, don't expect this all the time between hitting the dollar on the nose and the euro very close. And we rallied almost to 109. And we've had a pullback here with yields. And I was thinking before this week that the euro could make one more attack at new lows, and I'm shifting that belief. I was thinking we might go to 105.80 after a bounce, but this bounce has been pretty extended, and the structure looks a little bit different to me. And I think the possibility of once we get through 109, we'll be at 111 in a heartbeat. Bears will come back in at 111, but back over 111, you're talking about 115 and then 120. So, if you have a dollar pop on a hot number, I'm a seller. So I'm a seller at, say, 104.20, 104.50. I'm a seller at 105.80 if we take out that 104.98 high. And I'm a seller at 103.80 on a close. So I'm not at all looking to get long the dollar. I'm looking for shorting opportunities in the dollar.
Dare I ask, at what point would you be a buyer?
Well, I would say if we take out the 78.6 level at 105.80, 105.90, then of course the 107's a layup and things have changed, and maybe guys that are talking about super bull market as a best clean dirty shirt in the laundry will be right. But if that's the case, we're going to have a crisis going on if the dollar's going to 120. I actually think that there was some type of arrangement made between Xi and Janet Yellen when he came to San Francisco that was set up when she went there to China and had dinner with some magic mushrooms in it. I mean, that's what was reported, that they were magic mushrooms. And then he came to, I know it's, maybe it's a conspiracy. Anyway, she liked him. Read that. So, uh,
Well, psychedelics are red hot right now
are
in the
they?
news cycle. Yeah, absolutely.
Well,
I
I
mean,
mean, you look at listen to the news, and it's a it's a bad trip we're on. So anyway, you look at what happened is China. Everyone's bearish China, but look at what shares have done. They've used some draconian methods, but I believe China was getting exhausted and under pressure to continue to stabilize the yen. They didn't want the yuan. They didn't want the yuan to continue to weaken with a strong dollar because they were burning through reserves, and it's costly to defend a currency. That's why Japan only comes in when things are chaotic and they're very nervous about a level. And they've been they manage their currency, and it could actually benefit the Fed. And with all the debt coming due, a weaker dollar actually makes it easier for them to sell debt. And it'll lead eventually to higher rates. But I think that a weaker dollar is basically helps. You talked about emerging markets, a weak dollar, and I think that you're going to see the money flow that Brent talked about shifting from the U.S. to other opportunities overseas. You just look around with a dysfunctional Congress; it's broken. They can't get anything done. And you look at what's happening. We have two candidates no one wants to vote for, except people that consider have a religion with their politics. And are people going to trust the results of this election? And if you were looking at America, who is a less reliable partner for Ukraine than Iran and North Korea is for Russia, where is that excellence that people talk about in the US? I don't see it. And a lot of these things I think are going to cause people to want to diversify out of the US market into other opportunities, including Europe. Europe can always change alliances from depending upon us when we have candidates talking about, not honoring the NATO pact and swing towards China. And despite their problems, they're still a juggernaut. And European China relationship becoming stronger is possible. Egypt no longer wants to, it's illegal to use the dollar in Egypt. And that's how they plan to support their dollar. Our farmers are suffering with these low grain prices because China bought their grains from Brazil instead of coming to the US to buy grains. So this de-dollarization theme, I think, is going to continue. And the instability in the US of all of our institutions is making people nervous. They're going to be pulling dollars.
Let me ask you a question. You mentioned this idea, this notion of a deal between Secretary of Treasury and China. What would that deal look like? Would the idea here be that it would be about acquiring U.S. debt? What's your sense of what that deal would be? Obviously, we don't know. This is speculative. But if that deal did happen, what, in your view, might that be?
A weaker dollar. How they achieve it, through rate reductions, through interventions, to whatever they do behind the curtain, that's probably a question for someone like what's his name? Fed guy 12. Okay, so he was on the desk. Maybe he knows. But I think that the evidence will be the direction of the dollar and that the US dollar won stops depreciating, and that takes the pressure off of China.
Mm. All right, Dale, I've got a chart for you real quick. Brian, if we could pull up that chart of PSIL. This is PSIL, the psychedelics ETF. How is that for an ugly chart?
I
Maybe we're
wish I
too
could
early.
see it. I mean, they're all in small boxes for me today. I really can't see the charts, but
Uh,
um,
well,
I don't know.
let me describe what you're seeing. You're seeing it ride down from about 10 to about a buck 50 over a time horizon of
And where's
roughly
it listed?
2.5 years. It listed it like $10.
On what exchange?
I think this is Nasdaq. No, I'm
Oh,
sorry, it's NYSE. It's NYSE.
oh, well, you know, I don't know. I have more important things to talk about, but uh, you know,
Well,
anyway, I'm starting to have flashbacks since you put that chart up, and I see. Hold on, I see trails. But something from 10 to 1, you know, uh, sounds Ponzi-ish to me.
yeah,
That's why
maybe
I thought it might be an OTC bulletin board, pink sheet, where people can become their own Fed and use their stock as currency to dilute so they get paid.
nope, this one's New York Stock Exchange. Maybe it's
Okay.
a little bit early. Hey, listen, I want to pull up that chart real quick of Euro USD one more time here, and I want to ask you also about what you're seeing. So, is this strictly a bearish call on the U.S. dollar, or do you see some reason to be optimistic about the euro, or is it just
Uh,
less? Is it the less dirty
I'm
shirt
actually more
thesis?
bullish longer term on the Aussie on commodity currencies because I'm becoming a commodity bull. I've been telling people to avoid. I think an important chart to bring up is the GDX weekly.
Let's pull that
Since
up.
we've covered the dollar, let's move on to where people are really underwater. And I was on in January saying avoid them. I was on last year saying,
This is gold miners we're talking about
yeah,
here for folks who
GDX,
don't know.
and they're the blue chip gold miners. Last year, I said avoid them, that the cycle in miners was not due until 2024. I think we're approaching that time. Uh, GDX around 24 and a half. I'll be probing alongside of different miners that I'm following, uh, that we could still take another 80, $90 out of gold. We could still take another buck or so out of silver. And GDX is trading, I don't know, about 26. There's probably still another 10% on the downside in GDX in the coming days. So we are at the point, and even looking at GDX at 32, when I was saying avoid them, I guess the thing I could have done better is I could have shorted them, but I had a long bias long term, so I didn't do it, and I just built up, uh, you know, my grub stake for beginning to buy when people start capitulating. And I think we're getting very close to that. I think we'll be there by the vernal equinox. We'll be there sometime uh, late March,
Vernal equinox. So
the
we're
spring.
cyclical from literally off sun and moon cycles. Hey, listen,
WD GAN. Yeah.
while we're talking about FX, while we're talking about rates, I wanted to take a look at TLT. I know this is a chart you brought. Tell us what we're looking at here.
Okay. Well, last time I was on, I said I thought there'd be a rally in yields, that yields would head higher.
But by the way, let me
And
just describe this for folks who may not know. This is the
okay,
iShares 20 plus year Treasury bond ETF. This moves proportionally to price, meaning inversely proportional to yield.
exactly. So I was looking for lower TLT. As you can see, we're making new lows here and on the verge of it. And we haven't quite achieved even halfway back or 61.8. So I'm looking for a low between 91 and 89, and then another bond market rally, similar to what I just talked about in 10-year, that the 10-year could pop one more time, maybe
Hmm.
450, extreme case 460, and then head lower towards 380 to 330. Lower than 380. That was the most recent low. 360 to 330. So
Gosh, Dale, you're
we're
you're
getting
a
close.
popular man. We got a lot of questions coming in
Okay.
for you, but before we do that, I know you also brought charts on Apple and Microsoft. Did you want to touch on those real quick, or do you want to jump right
Yeah,
into questions?
let's touch on Apple because there's a lesson in this besides a price target. I like to teach. So as you can see, look at all the tests at 180. And look at in the last few times, the earnings, we had a good rally after earnings when it held 180, rally to 191. Last time I was on, I said I'd use strength in the market and the S&P's railing over 5,000 as a shorting opportunity in Apple, which I did at those 61.8 level, at the 190 level. We went to 180 recently, bounced to about 84, was pretty pitiful. And even today, we traded under 180, and I believe we're going to close above it. Now, here's a lesson: learn to be skeptical when the market gives you multiple opportunities to buy or sell at a major technical point, because good trades don't give you those opportunities. Maybe there's one retest after a breakout, but normally, if you don't act on the breakout, you're you end up missing the move. So I think this is about the fifth time that we've tested 180. So Mr. Market is saying, yeah, you're pretty slow. You didn't. It was a quick move after earnings, but I'm going to give you another chance last week. And you know what? I'm going to give you another chance this week. To me, it's just setting up for a major failure on a close under 180. I think we could see 160 Apple in a heartbeat.
Yeah, let me ask you a question while you're teaching on this. I'm really curious to hear your answer. I'm a little bit of a nerd. I follow a lot of the tech news. There's a lot of talk in some quarters. Obviously, there are varying opinions on this, but one of the things that you hear about Apple is that many of the places where they have been making a lot of revenue, those markets are maturing. They're becoming more commoditized. Things like the iPhone market, the iPad market, and that they may be positioned well with the Vision Pro, but it may still be a little while into the future before they can make that a regular source of revenue. When you hear that kind of fundamental analysis, is that something that you take into account, or do you just kind of tune it out and say, "Hey, listen, if it's not in the price, I don't care."
Well, before China had their government officials stop using iPhones, I predicted that Xi would strike back at an American icon, okay, because of the trade war. And then that happened. And I guarantee you that their citizenry probably aren't using a lot of iPhones anymore either. If you lived in an authoritarian state and all the government officials were using other than iPhones, would you use an iPhone?
Mm.
Oh, there's a guy with the iPhone.
What's
That'd be
what?
you, Ash. You'd have to find somewhere to hide, buddy. Anyway, so yes, I do take it
that
into
would that would
account.
be almost like using an Android in media.
Yeah,
Everybody in media has an iPhone.
exactly. You're
Yeah,
right. You would stand out.
you would
So,
stand out.
yes, I do take that into account. And China has no interest in seeing a continuation of Apple's success. And I think that they've had bad earnings reports for a year now. And now they're going to try and save it with some type of AI play. And the chart also is ominous to me. It looks like a head and shoulders top descending triangle. It's a reversal formation. So it all ties in.
I
Um,
just I just don't know. Just speaking, putting on my tech guy hat for a little bit, following this not incredibly closely, but moderately closely. I don't know for iPhone sales what they're going to be able to do on the hardware side that quickly. That's going to make the new iPhone 16, 16 Pro Max a major AI play. At this point, most of the differentiation is on the software side rather than the hardware side. Maybe that's something that's coming in the future. Maybe there is a major innovation. But boy, I have to say, on balance, it would be really tough for Apple to pull a
You're going to
hardware.
make me want to double up tomorrow morning, Ash. All right. So, I mean, that's interesting. I appreciate you adding that to the bearish argument.
I mean,
And
listen, I could be wrong, but I just
oh,
don't. I just don't know
everyone's
what.
wrong, Ash.
But
It's how you're
what
wrong.
Well, I'd rather, I like, looking at some of the fundamentals in this. I
Okay.
just don't see, like, what you can add to the new iPhone 16. I mean, I'll give you an example. Like, I was one of these guys who just constantly renewed their iPhone. Every year, a new one came out. I bit the bullet. I got whacked, whatever it was, 5, 600
Yeah.
bucks, and I bought a new one. I'm too out of date now. This never happened before because it's just they look essentially the same. Like, well, the camera's a little bit better. I just don't know what they're going to do to the 16 that's going to make it that compelling from a hardware perspective. I mean, everybody, and you pointed it out perfectly, Dale. The buzzword is, oh, it's AI. It's going to be AI. Well, what are you going to do from the hardware side that's going to have a real kind of quantum leap effect on a device when it's all happening on the software side right now? Now, obviously, there's going to
Yeah.
be some maybe some edge versus center processing issue here, but I don't know that we're there yet from the tech perspective. So
You
it's
know
really
what?
interesting.
So that's the second largest market cap. And I'm not calling for a crash or anything, but put up the Microsoft chart. I
Yeah,
think we
let's pull it up.
closed down today. This is number one in market cap, right? Biggest stock in the universe. NVIDIA hasn't caught it yet. I'm looking at the potential of a right shoulder of a head and shoulders top. Last week's accelerated advance in the indices did not take Microsoft to new highs. And if it ekes out a new high, it's not going to confirm. It's been diverging. It diverged at the last high, and I think it's back under about 298. Um, you're going to get at least another $20 break. And then let's wrap it with the Dow chart because this is a classic example and it's a weak sister. The generals are leaving the front lines. They want to watch its next battle from their encampment, not at the front line. So if you put the Dow up and you look at that rising line, it's a rising wedge. Now look at the bottom on the RSI. So we've been diverging for several weeks now. Um, the Dow is a much weaker chart formation. It underperformed on the way up, and it's going to lead the correction to the downside. Probably minimum, I think, 1,500 points from here it would be the bottom of the wedge. So it kind of all ties together. Maybe one more pop in yields and pop in the dollar and the market correcting um, sometime into March before it attempts another advance. But that Dow chart does not look bullish to me.
By the way, listen, I'm not piling on here with Apple, but I just want to read you this lead, the last hour breaking on Bloomberg. Quote, Apple is canceling a decade-long effort to build an electric car, according to people familiar with the matter, abandoning one of the most ambitious projects in the history of the company. This is literally crossing here within the hour on Bloomberg.
I wonder if they'll rally the stock because they're finally getting out of a bad trade. Anyway, Apple's got problems.
Yeah.
It would have to close back over, say, 198 for me to say it's okay. So kind of like Tesla needs to close over 208 for it to stabilize as well.
Hey Dale,
Um,
while we're talking about round numbers, I'd be remiss here if I didn't mention Bitcoin. I don't know if we have a chart
oh,
ready. Trading
yeah,
at 56,810 on my screen right now. Oh, there it
yeah.
is. There's the chart coming up in just a second here. Obviously, this has been a considerable move up, crossing 50,000 within the last couple of days here. I think on well, anyway, quite recently, closing above 50,000 or closing out, remaining above 50,000 for more than a spike. A couple of bits of news here for folks who are really following this closely. BlackRock's new spot Bitcoin ETF, over $1 billion in volume for the second consecutive day today. And by the way, something that folks in the community are talking about, and this is, I'm reading from a CoinDesk article here. I'm Car Godboll. Bitcoin funding rates jump to 100%. This is for the funding of the perpetual futures, which are a big deal within the Bitcoin space. This is a significant indicator for folks who follow Bitcoin closely. But anyway, the chart speaks for itself. Dale, any thoughts on it?
I can't chase it. I missed it. I can't chase it. I'll wait for this blow off to be over with and see how it settles. So sometimes the right trade is no trade. It's a no trade for me up here.
Let's go to some questions because we've got them coming in fast and thick. I hope we can get to a couple of them because we've got some really good ones. The first one comes from AJS. How much will this next Fed meeting impact markets? Boy, that's a big question.
I think the market's leading the Fed. So we'll see. I think that 60-minute program was about him, Paul, trying to say that they're not going to monetize new fiscal debt and trying to preserve his legacy. But I look for Fed days um, where I don't trade him because I don't know. He's a little bipolar. In December, he was Santa Claus, and his last presser, he was the Grinch. So I don't know what side of the bed he's going to get up on Fed Day next month.
Hey, by the way, probably, or at least possibly by design, right? Maybe it's about just keeping the markets off balance a little bit.
Well, they're not off balance. He lit the fire in December, so they're not off balance. They're euphoric.
And that is
So
maybe the genesis of the Grinch
yeah,
perspective.
and it hasn't had much impact.
No, it has not.
So
It has not at
maybe
all.
they're becoming less relevant.
Well, I guess it's maybe one of those things that they're less relevant until they lower the boom. Right now, I mean, to your point, Nasdaq 100 trailing 12 months up, well, just under, I mean, a shade under 50% right now.
Yeah.
After today's
So
close.
so uh, is that a Paul Volcker campaign? I thought he wanted to be Paul Volcker. I mean, he had the tools to do it. He could have hiked in between meetings like they used to. Therefore, Arthur Burns can talk tough, but I haven't seen it.
For those who are relatively new to markets, being called Arthur Burns is not a compliment.
It's like being called Herbert Hoover in a way.
Yes, yes, extremely well said.
A little history
Uh,
lesson here.
Macro Butler asks, Dale, could the JPY strength be a catalyst for DXY weakness? What's going on in Japan, man? This Nikkei 225, one of the oldest cliches in
Wow.
markets was they never regained its 1989 high. Nope, now they're back over it.
Yeah. So you had to hold for 40 years, right? Your your grandchildren are now even when they inherit your portfolio.
Yeah,
You know
well,
what?
look at not when you look at
I'm
not when you
looking
look at
for
the
a top.
dollar Japan pair.
I'm looking for a shorting opportunity between 51 and 52. 151 and 152. Maybe it'll
It's
be after the PCE this week. We're
USD
close.
USD JPY right now at 150, basically 150.50.
Yeah.
Thereabouts.
Yeah. I give actionable ideas, buddy.
I love it.
I don't go, well, if it goes up, but they sell it and comes back down, but yet support comes in and it recovers, it could rally again.
Yeah, lots of guys have made a career on cable television with just that kind of analysis.
Yeah. I don't understand.
Another one of the
But I
great.
could do it. I could imitate it.
That was
So
perfect.
go ahead, trade that. Anyway,
Here's a good one for you. Mark Naismith, Belay. Dale, with your view on DXY, are you looking for gold to do well? What about, let's just take that first part of it.
yes. I think there's maybe one break. I'm expecting gold if we have one more break. Back up the truck at 1950, 1940 is 61.8 back. And I also believe the miners, people are so discouraged in the miners. I mean, here's an example. The chart I brought on Majestic, The recent low has been about 420. You have to go back to the COVID low to have these levels. Okay. And silver at that time, when AG was 420 during the COVID crash, was $11. So silver is 10 full dollars higher with the shares testing levels when it was 11. Is there a reversion to the mean trade here? I think yes.
I think we got time for one more question. Let's try and keep it on FX. Who one two says great analysis. Thanks. Why has the pound been so flat lately? Any thoughts on the pound?
I don't know. I do think there's been a shift in trend on euro pound. Okay, which is kind of a bearish sign for the dollar. For a long time, EG has been going down. Learn to trade, or at least watch EG, so you know what your preferred long and short is. So, like right now, if you're bullish a dollar, the pound's a better short, and if you're bearish a dollar, the euro's a better long. So, I can't explain it. There's been such a lack of volatility, but maybe that's just the calm before the storm. I thought we were going to go to 123.50 before the next rally. So we'll see. Maybe it could happen. Maybe Euro's bottomed and cable hasn't. That'd be
Hmm.
interesting. I'd like to see, um, the euro. I'd like to see a euro pound hold these recent lows.
So if Euro's bottom and cable hasn't, that implies that there's some more headwinds for the pound.
Yeah, there are
Hmm.
a lot of people pretty bearish UK.
I know.
Okay,
Well,
and they say what happens in the UK happens there first and America second. So they had that gilt crisis when the pound was trading down there at 110. And it wasn't long after that where we started having real severe breaks in our sovereign debt market too. So I think we are in the next few years going to go through. That's where all the debt's been created, government debt across the globe. That it probably starts in Europe, and I don't think a stronger euro is going to be make it any easier. And then it shifts to Asia, and then washes upon the shores of America. But I think there is a
by the way, to your point earlier, you also see in the UK much of what we're seeing here in the United States, which is a broad sense of a large swath of the population who just does not like the choices that they're getting at the polls.
yeah, and they have a more difficult economic situation than we do because most of their homeowners do not have 30-year mortgages locked in at 3. I think they have to roll them every 5 years, 7 years. So a
Yeah.
lot of people are losing their homes based upon interest rates tripling.
Yeah, it is a significant and material difference that is just not the case in the U.S. We had it a bit. It caused a financial crisis, but by and large, a much higher proportion of long dated fixed rates here in the U.S. in the mortgage market. Yeah, it's always awesome when you join us on this show, man. And this was no exception. Terrific show. Final thoughts, key takeaways that you'd like to leave our viewers and our listeners with.
Find ways to diversify out of the dollar because I know, look, I have a lot of my assets in the dollar, buy some physical metal, um, look at some fiats that will outperform because really that's whatever you own, whatever your asset is, it's priced in dollars. So learn how you can diversify out of it, just having your holdings in dollars. Look elsewhere. The world is a big place.
Dale, thank you so much for joining us. I love the fact that you're never afraid to call it like you see it and take a stand. Uh, Dale Pinkert, TradeGateHub, thanks so much for joining us.
Great to be with you, Ash. Thank you.
Thank you all so much for watching or for listening to the Real Vision Daily Briefing today. Remember, if you want access to research from the pros, head over to realvision.com/RV Marketplace. That's realvision.com/RV Marketplace to see what RV member discounts are available. We'll be back tomorrow, same time, same place. See you all then. Have a great afternoon, everybody.
Join over 5,000 attendees for the largest AI event in Asia at Super AI Singapore, June 5th and 6th, 2024. Raoul Pal, Benedict Evans, Balaji Srinivasan, Edward Snowden, and over 150 others will join the industry's most influential to explore and unveil the next wave of transformative AI technologies. Singapore will become a vibrant AI hub for a week from June 3rd through June 9th, with over 150 side events that will make for unparalleled networking opportunities. Visit www.realvision.com/superai for 20% off tickets with the code REALVISION or click below.